The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters. I'm Steve Rhodes, and thanks so much for joining us right now. You got the Dow up 157 points. The S&P's up 17. The composite up 41. Small caps up 10. And Tom, if you'd like to see Tom today, you can see him live. Just simply go to Dallas. If you're in the Dallas area, or if you're in the Fort Worth area, anywhere in that zone of the country, you can catch Tom at 12 today. He will be at the Nadex area, and he will be there from 12 to 4. That is on their time zone. So, and if you do see him, do me a favor, give him a nice big bear hug. We're having a nice bear relief rally here. And, and that we'll take a look at the markets. We can take a look at anything that you want. You can always give me a call at 877-927-6648. We took a look at what was popping, what was dropping in the market during the 9 o'clock show on the Trader's Edge show, and you had the mattresses. Well, you got 1, 2, 3 leading the charge on the way down. You got Tempur-Pedic down $19 and change. Mattress Firm, MFRM is their ticker symbol. Tempur-Pedic is TPX. Mattress Firm down $6 and change. Select Comfort right behind them. They're in the best of all of those three, best of shape of those three. They're down $6.20. And so you've got one that's down 44%, the other 18%, and then the other 24% out there. Don't, folks, do not get in front of those. In front of those stocks. Now, leading things to the upside, you got Intuitive Surgical, ISRG. They're up $12 and change. They're up 2 3/10%. You got MasterCard up $8, up 1.3%. Priceline up. Did I say? I think I said Priceline. You got MasterCard up $8, 2%. Ulta Salon up $6 and change. Google up $6, $7. Apple up $6. So if we take a look at the NDX here, the NDX up 1 5/10%. So it's the NDX and the that is leading the charge to the upside, up $38 and change right now. King Dollar pulling back down 32 cents as we speak. Gold trading up $20. Let's go take a look at gold. Gold trading at 1637 here right now. And if we take a look at gold, we'll pull that continuous contract up on the screen. We're just going to look at the 120-minute chart. Now, what you're going to see out here is gold coming off of what gold is doing here, it's coming against two patterns. Now, I just have the 120-minute chart up on the screen. It's a little bit easier to take a look at. And so if we take a look at the swing point from about, looks like at about midnight on May 21st, when gold's trading at, let's say, $15.99 or so, right around there, $15.99. That is going to be what I'll call the X marks the spot. That is the X point. And gold moves down and makes an A to B equals CD pattern. In fact, I'm going to blow this up a little bit further. Hopefully you're watching on Tiger TV. If you're listening on the radio, thanks so much for doing that. You can catch the archive of this show on Channel 10. And so if you are wondering what does a butterfly pattern look like, this one is great. And when I say this one is great, look at the wings on that. You can see why they called this a butterfly pattern. Just simply because look at the two wings on this thing. Now, this one is one of those really gorgeous butterfly patterns. Wish my software could do multicolored, as opposed to just simply one color out there. Well, we've got the light blue butterfly pattern that is out there on the screen. I don't know what it looks like on your screen, but when you take a look at this, folks, what you're seeing is just wonderful sacred geometry. What's sacred geometry? Sacred geometry, just simply, folks, what that is nothing more than this wonderful Fibonacci summation sequence. And when you take a look at that, you're looking at a 1.618 expansion right here off of the time frame that we're talking about on May 21st. That's a 1.618 expansion. What does that mean? Universe is always contracting or expanding on a continuous basis. If you took the price point of $15.99 all the way down to the low that was put in here at the 10/10 time frame on May 30th when gold traded down to $15.30, if you took that price difference, you multiplied it times 1.618, added it to the low there of 1530.60. It would take you right up to right about the area of 1639. That is where you completed a 1.618 butterfly sell pattern. That's a sell pattern. Now, I haven't seen the bearish confirmation. What you also have in this price range is, so you've got a butterfly and you also have a Gartley pattern. You have a Gartley sell pattern coming off of the swing point high at 10:10 a.m. on May Day, May 1st, when you had gold trading up at 1672. So it's running up against an area of some strong resistance, because you're running into this butterfly, you are running into this Gartley pattern. Now, what do I expect? I expect this pattern will fail. Why? Because I see King Dollar pulling back. You got gold priced in dollars, and it's important to want to understand these patterns. If you are in this trade, you also want to understand where you're going to have failure points. You want to understand where you're going to run into resistance. When a butterfly fails, what's that turn into? Well, first turns into a move. That says gold may want to get up to the 1672 area, maybe a little bit higher as well. So we got a number of callers on the board here. Let's go to K. Rico in Pompano Beach. K. Rico, thanks for calling. Thanks for holding.
Hey, good morning, Steve.
How are you?
Steve. Oh, good. Thank you. How you doing? You sound great all the time, man.
Thanks. Hey, nothing could be better. Last night was really a cool night because I got to do my favorite thing, which was help others. And so it was just, it was with a group of troubled young people out there, and they have so much to live for. We all have so much to live for. So, anyways, that's why I'm doing so great.
I only remember one thing, is that our health is our wealth is our health.
Oh, absolutely. And people should write that down. I like that.
Yeah, it's absolute. My last thought and my first thought in the morning.
Yeah, absolutely.
Joyous.
Well, you got to be. You've got to be loving life down in the southeast part of Florida.
Yeah, well, I'm a very fortunate human being. I'll just say that.
That's good. Hey, gotta love it. Good fortune. I remember when I went to the first time I went to Hong Kong, and it had gone over there a number of times. And my first trip over there, I was doing business, had a business partner over there, and we went to the jewelry stores. I was staying on Nathan Road, and which was the real tourist area in the Kowloon area. And what I bought, the gifts that I wanted to bring back for people were the little symbols, the Chinese character that said "Good Fortune." So I brought that back, gave them away as gifts to everyone, and wanted everybody to have good fortune in their life.
Sure.
And fortune does not necessarily have to be economic fortune.
Oh no, never think of it that way. Think of it as in more positive.
Absolutely. Yeah, absolutely. I used to wear that all the time. So tell me why we have the good fortune of talking to you. What do you want to look at?
You a funny guy. Okay. I have been following Lennar for setting it up for the big short of the year.
Okay.
That comes due. I was looking at a 10-day chart right here.
Okay.
And it actually looks like it topped out. It topped at on May 23rd at around $28, $29. Excuse me, $28.88 or something.
Yeah. So on May 16th, I show it getting up to $30 and change, $30.12.
Okay, I'm looking at a 10-day. I'm sorry. My point is, every morning when the markets are up like they are today, this thing popped up there.
Yes.
And look at how it's faded.
Yes.
It's just fading.
Let's look at the intraday time period on Lennar. And, of course, I need to refresh this here just a little bit. So we'll see what it's doing just simply on Tom's favorite time frame, which is the 10-minute chart. Now, what it did do nicely right off the bat there at 9:40, it punched up with 1.1 million shares. So the low of today obviously should be some pretty strong support. And the next candle right after that on the 10-minute, not too bad, 865,000 shares. So as it's backing off, it backs off in that next 10-minute session, 292,000 shares. 423,000 shares right now. It's got 100. So it's backing off with some light volume here right now. Punches up with high volume. And what it's running into the supply line right here at 9:40 in the morning on June the 1st, where it had 1.2 million shares. So that 1.2 million shares, it doesn't have the juice just yet. Today is not a day. So let's go back. Where are you looking at to go ahead and pull the trigger on this from a short standpoint?
I believe that for example, you guys are thinking that we're going to have a good retrace up movement.
Yes.
I don't have the quick numbers in my mind, but let's just say we get to the S&P 500, 1330.
Okay.
I think you guys are on the same page roughly for a retrace.
Absolutely. Yeah. There's no question there's going to be a retracement. I mean, there were you love the celestial charts out there, and there was no question with price moving down into a full moon, with a lunar eclipse, moving down into the perigee lunar phase, moving down into a 16P index date, and I'll give you one that you should look at here. Of course, there's only one more left in the cycle, and that's the moon conjunct Pluto. You go take a look at that out there, and what you're going to see is the market pulls down or creates lows in the moon conjunction of Pluto. And there's one more left out there. And folks,
what's that date?
What's that?
What is that date?
Oh, I don't want to give that to you.
Okay, I'll do some homework.
You got to go look. You got to go look it up, my friend.
See, no problemo.
But go check it out. Go check that one out. You never know why. You never know. Is do you believe in coincidences or But go check that one out. So yes, I believe that there is a short-term low that has been put in. There's been no climactic low that we have seen out here, and we should get some kind of bounce. And I'm looking for places to go short. So what we all have to do is just kind of wait for the market to give us some information.
It's the information that I'm really looking at is that I'm aware of the housing market in Michigan.
Yes.
And I'm putting all the combinations of the Michigan and the research I'm doing. I just want to put a nice fat short on Lennar when it gets back into that 28.50 and above area and just walk away, because I think the fact is, once you get into, if you look at a chart, after October, the housing stocks, Lennar, Pulte, Toll, these guys start to fade for the rest of the fall and winter because, hey, they're not digging holes to put new housing in. And I also believe the mortgage business has got so many houses from homeowners that nobody's going to be buying volume of new homes.
Well, yes, and I mean, I'd say, you've got somebody then saying, aren't home builders on fire today? But I think home builders the stocks have been on fire. And you got to remember, I mean, they've got some pretty good setups here. Those that certainly survived, and Toll, specifically, it's a good-looking chart out there. Lennar is a good-looking chart, in my opinion. I mean, I would be looking for some other area of weakness. When I drive around, yesterday I was driving around, an area of Orlando, and came across an area where there was all kinds of new housing that started in a place that, had been bare for a long time. So,
Well, my feeling, though, is if I could get a short at Lennar in the 28.50 range, maybe I could catch 5 points.
You might, my friend. Hey, good talking to you. 877-927-6648. Dow up 153. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small-cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Stock market corrections are the #1 reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage of TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. You've got half of the Money Masters here. Steve Rhodes with you. Tom is in Dallas today, so if you are in the Dallas-Fort Worth area, go over to the Traders Expo. All the details on the homepage of TFNN.com. Tom will be there live from 12 to 4, so it'll be a great opportunity. You can learn how to trade the Nadex platform as well. So just to finish off K. Rico's call before we go to Dave in Boston, and so I hope K. Rico is still listening. So, should Lennar pull back? And I've got the monthly chart up on my screen. And what it's done here, it's done really what it should do. It did a 1-to-1 A to B equals CD. In fact, I think it's got more left in the move. But the 1-to-1 A to B equals CD takes you up to $30 and change. Where does it get to? $30 and change, $30.12 in May when it makes a high out there. Now, it does not have any type of bearish candle pattern on this pullback here whatsoever. If it does pull back, it's trading at 26.20 right now. I would say you're going to find some pretty strong support in the January 2008 timeframe where you had 230 million shares. The high out there is 21.07. So if you're looking for $5 on a $26 stock, I suppose that would be the first area where it would pull back to. So that was for K. Rico, our man in Pompano Beach. So let's go to Dave in Boston, and let's get an update on those Boston Celtics.
Steve, Paul Pierce with a 3-point shot over LeBron James at a key point in the game.
Oh, baby.
Unbelievable. That was a fantastic game.
Now the series, so the Boston can wrap it up, is it tomorrow night?
Thursday night in Boston.
Yeah.
I got a feeling they do not want to go back to Miami.
Yeah.
They're just on a mission.
Yeah, no, I was busy doing some other things last night. Didn't get a chance to watch the game. Was it the final score, what was it, like 94-90 or something like that?
94-90. The Heat pretty much had the lead all the way through, but Boston kept hanging in, got down by 9. They went on a 15-1 run, and Rajon Rondo made some key defensive plays. And, when the pressure's on, the Heat has a lot of great players.
Yes.
But Boston just seems to be more of a team.
Yeah, well, that's it. I kind of saw that. The first game, I caught the first game, and Boston was just off the mark there. Everything they threw up was either hitting the air or the iron, and they were just simply off the mark. But they do seem to have just simply a better team, a whole team thing going on. And you're not going to win a game with 2 players.
No,
and that's what it seems like Miami's got. It's got 2 players that they're playing with.
And the coaching was they went from a zone to a man-to-man, and they had Miami confused, and it was just a great victory. So we'll take it. But you know what? It's not over yet.
No, it's not. And tonight, folks, should potentially is going to be could be a sweep tonight of the L.A. Kings over the New Jersey Devils. And I believe tonight is Game 4 in Los Angeles.
Game 4, what a run! A number 8 seed to do what they've done. They set a new road record, the most road consecutive victories in just about I think any sport. So it's phenomenal. And to win their first cup, how can you not root for them?
Oh yeah, exactly. So it'll be great. Speaking of great, you got the great one who I'm sure will be there, Wayne Gretzky, who did play for the L.A. Kings after.
He dropped the puck in game 3.
Oh, did he? I didn't get to see the opening.
He did a ceremonial puck drop in Game 3, which was really nice.
Oh, that's cool. That's cool.
I like it. Yeah, I like it. Nothing. Hey, and 2 overtime. How many overtime games have we seen?
Oh, absolutely.
There's nothing like a game. Especially you won't go to Game 7.
I've had some blurry eyes as I've had to get up to start working on my newsletter, which, folks, is usually about 5:30 in the morning or so. So
speaking of that, I got your newsletter, and I'm already in one trade, and we're already in the money. So
good.
So good. Hey, my question is on the S&P.
Yes.
On this bounce.
Yes.
And I've been around long enough to know with you guys, as far as when we hit certain levels, we're not going to know until we get there to see what type of volume and expansion we're going to have. But what levels are you looking at? It's an initial bounce anyway.
That's right.
13, I'm thinking 1320. Is that what you're seeing?
Yeah, so if I'll go to the first. I'll go to the SPY, and then I'll go switch over to the S&P cash here.
Perfect.
And so on the SPY, what you're going to be looking for is as it gets into the May 29 swing point, which I'm sure that's what you're looking at on the S&P. So the low on the SPY, folks, is 132.75. And has 152 million shares. So it's going to be how that area gets hit that's going to release the first piece of information to us. Today, you've done 47 million shares in 1 hour of trading. So you absolutely are going to, now, I don't expect we're going to get up to that type of price level. But, David, can you do me a favor and stay with us through the break here?
Sure can.
Okay, and then we'll go take a look at the S&Ps. Anything else that you'd like as well, folks, 877-927-6648. Having a wonderful Wednesday, and all because you're out there with us. Dow's up 143. We'll be right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow up 152 points. S&P's up 16, trading out right now at 1302. We're on our phone with our man Dave in Boston, taking a look at the S&P cash, in fact. And Dave is right. You know, he's taking a look at the first level that will give us some type of information is at the 1320 area. The actual price point, Dave, that you should be keying in on is going to be 1318.90. That's going to be that May 29th swing point. Now, when you take a look at the chart of the S&P cash, what you are noticing today is that it's back up and over the October 27th swing point that's out there. And I always use that as a reference point right now. And so you're up and over there. If for whatever reason, if the market were somehow to sell off and you close back below 1292.66, that would spell curtains, in my opinion, for the market. So, I expect it's going to stay up over there, but that's certainly an area that you want to be able to watch for. So if we take a look at the bounce here, what you will see on my chart, a couple different lines out there, folks. The one area, assume that it's going to come in, and we take a look if it's coming in with volume, with or without volume. Look, the reality is we want to see it actually come in to that swing point on lighter volume. But, we'll just have to wait to see what the market says to us. The real next area of resistance that it's going to hit is going to be the March 6th low. And that price point is 1340. And that's really where I would expect us to, where I would expect to see the bounce take us to. Now, it's possible it could get up and test the lower portion of this trend line. This is on the S&P cash. Here's the problem that I have with this trend line is that you're better off taking a look at channel lines in the actual ETF itself, because, I'm going to put the SPY chart up on the screen, the weekly chart. The problem with using the S&P cash is there's no adjustment for dividends. So if you're really trying to understand true price, the best place to take a look at is on the ETF. So if I pull up the weekly chart on the ETF, what you will notice is on the weekly chart that it still has not broken through the uptrend channel. I mean, that's what it's really trying. And the uptrend channel, folks, I'm going and talking about goes back to the March lows of 2009. And so when you build these channels on your screen, what you want to do is you want to connect the dots. The dots mean co-located opens or closes. So in this case here, you're looking at the open of March 19th, which is at the 67.95 area. And you got to have at least 3 co-located opens and closes. So the next 2 that it really runs into, it's going to run into the close of September 2011 out at the 113.15 area. And then the next time it runs into a co-located open and close is November 25th, 2011. That's where I believe the market is going to be trading into. When it breaks into that area, assuming that the SPYs do that, it's going to be breaking a long-term trend channel going all the way back to the March area. So I think looking at this chart here is better to now. So where does the SPY actually bounce to? If you take a look at the weekly chart, you're getting back up to the gap that's out there between the beginning of the week of May 18th. That high out there is 135.61. And let me just refresh this, make sure there is a gap out here, because I had to change a couple things up this morning. No, there was no gap. I'm glad that I did that. So, again, you're still looking at the week of March. In this case here, it would be March the 9th. So on the SPYs, you're looking at the low of 134.36. So I think you just have to, what we're doing here is just, and what you absolutely have to do is pay attention to the euro and, and the dollar index. And the euro put in a nice butterfly pattern. And it did that. It extended just a little bit beyond that, but that area here really held, and that was at the price point of, right in the 123 area. So you would expect just a normal bounce, and that normal bounce in the euro, well, that could actually take us, I expect it would take us to 127 and change. We're trading right now at 124.9, so it could be a decent bounce here, but all I expect is this is nothing more than a bounce in the next legs of the bear market.
Yeah, certainly a tradable bounce, but just noticing the volume, Steve, on the SPY right now, we got well over 48 million shares after 1 hour trading. So,
exactly.
We definitely got some energy coming in.
You do, and you're going to have some short squeezes going on, as the market moves up, and as well there should be. Folks that caught the, sold at May. And, it was a great trade because the SPYs were up as high as 141 and change, and came down all the way to the low on June 4th of 127. So that was a heck of a nice move. And so now you have to expect a relief rally here. But that's all that it is at this stage.
Fantastic. Outstanding, Steve. Great stuff as usual. Hey, go Kings.
Okay, you got it, baby. And
take care.
Okay, take care.
Bye.
All right. And, folks, you can always give us a call, 877-927-6648. And so let's take a quick peek around at the ETFs. As Dave was saying, on the SPYs right now, just simply through the first hour and 9 minutes of trading, 51 million shares right now. That's after. Now, yesterday here was a bullish engulfing candle. So you did a bullish engulfing candle. And if you take a look at that, you're getting confirmation today with a gap up. A higher close, clearly that says that, the bounce is absolutely underway. So if you're still short, if it's a core position and you're up here in the on the SPYs up in the 140 or on May the 1st, then maybe you take a look at, keeping that core position in place. Just know that you're going to experience heat. It's nothing more than just simply, normal bounces, inside a market. And, but expect some heat. If we go take a look at the other ETFs that are out there, you're going to find a little bit of synergy. The small caps, the IWM, created a bullish engulfing candle yesterday. That's after making a 1.272 expansion, I believe, of the last set of swing points. What am I talking about? I'm glad you asked. So let's go see. If we take a look at expansions of swing points, we'd be looking at the low on May 21st, the low 74.41, the high as it did a retracement and it moved up to 77.91. You'll see a 1.272 expansion came in at 73.46. Traded just a little bit lower, but you're not. I'm always amazed when it hits it right on the dot. It does it often, but that's not the way that I trade. I look for this as a range. Always looking for a range. So it does a 1.272 expansion between swing points. There's the A, B, C, D down. That's in here. So you get a bullish engulfing candle. You're getting confirmation today. You're up towards the close here. If we switch over real quickly, and I'll go back and forth, but let's just quickly go over to Europe, see what the DAX is doing over there, because the DAX will give us a signal an hour from now, a little bit, 50 minutes from now. But let's go see what the DAX is doing as soon as I can find there we go, world. And so the DAX, not doing anything great. It is trading up for sure, trading up 90 points right now. That's up 1 5/10%, but it is off of its lows. So the relief over in Germany is just kind of like so-so, even though you got the DAX up 1 5/10%. But the FTSE up 2% right now. So let's take a look at the FTSE and see what that looks like. Then we'll go switch back over to our ETF structures. And it is important to put these markets together, folks, just simply to understand what's going on. So the FTSE having a couple-day vacation, and the FTSE up towards its session highs, and it had made a 1 to 1.272 A to B equals CD down. The FTSE up over the swing point of December 20th. That's what it was tackling, December 20th, 2011. Where would the FTSE bounce to? FTSE, first area where it would bounce to is the 0.382 area. That's 55.19. You're at 53.62. So it's got a ways to go. And then where I would expect the FTSE actually to get up to is just above that. And that would be to the April 11th swing point low at 55.76. Let's go see what we have over on the left side of the chart here, and where it's going to also really run into a little bit of problem is on October 27th, and it's really going to be the low there. The low is 55.53. So you have 55.53, 55.19 really as your target area for the bounce on the FTSE. So now let's go back to our ETF structures here, and we were taking a look at the small caps. As far as volume so far today in the small caps, you have done 11 million shares. So you got 11 million shares. The low was made with 50 million shares. What's that trying to get up into, at least as the first area? Just like as we looked at in the FTSE, the area is going to be that October 27th time frame, which also coincides with the swing point of May 29th. The low of May 29th, 76.76. 51 million shares there. So you've been trading for an hour. You've done 11 million shares. Mathematically speaking, that would be the equivalent of about 68, 69 million. Someone would have to actually do the straight line math there to see how good Stevie's mind at mathematics was. But that is the volume characteristic right now. What you are taking a look at is that October 27th high, also at 72.65. So that's going to be the area where you're going to get a piece of information on the small caps. The small caps get up over that. The IWM, it will go ahead and trade into the March 6th low. That's really the area that I'm focused on. In this case here in the small caps, 78.41. What you also have in that area is you've got the April 10 swing point at 78.14. Hey, how about that? You'd have 41 and a 14. So that's the area where you want to be paying attention to, assuming that it can clear October 27th. So as I said, you had a bullish engulfing candle, and it was a 2-candle bullish engulfing, and you're getting that confirmation today. So really does, in small caps were the strongest yesterday, percentage-wise, on the way up. Today, percentage-wise, the small caps up 1 6/10%. They are just behind the composite, just behind the NDX 100. Let's go take a look at this. So we looked at the SPYs, we looked at the small caps. Let's go look at the diamonds. The diamonds actually struggling, and the diamonds struggling. You're up 159 points here. But when I say struggling, you take a look at yesterday. Did it make a bullish engulfing candle? Let's see. So you open on June 4th. The open is 121.09. You closed yesterday at 129.09. How about that? Okay, it did it right to the penny, so you did have a bullish engulfing yesterday. Let's see. Volume-wise today, 2 million shares. That was after making a low with 6.3 million shares. Okay, so the diamonds do have some volume coming into the swing point out here. The B point actually from May 23rd, which has 8.5 million shares. That low, 122.82. You're at 122.78. I expect that you will see the diamonds bounce up into the, get up and over that and bounce into the May 29th low of 124.90. You're trading out at 122.80 right now. The diamonds have A to B equals CD down, a confirmed A to B equals CD down, and it's a doozy, folks. So, you know, this is, again, like, as I say, until things change, and things haven't changed in one day. In fact, what you have to expect, my newsletter clients, they know this because I provide them with the information and give them the detail. What you have to understand is that during the bear market run, the first leg, October 2007 to the March lows of 2009, 10 of the 20 largest popping days occurred during that time frame. Percentage-wise, dollar-wise. And in bear markets, you're going to have relief rallies like this. You have to expect it. And you have to just simply determine whether or not you've got a core position or a trading position or both, and then manage things accordingly. And so, anyways, that's my 2 cents for whatever you think those 2 cents are worth. Usually my 2 cents are worth at least 4 cents. Now let's go take a look at the Qs out there. And the Qs right now, yesterday, so the Qs, you did not have a bullish engulfing candle, didn't have any kind of bullish signal, but today you get the pop-up. So that's kind of an interesting thing, isn't it, folks? And so you've got the Qs up with trading at 62 1/4, 23 million shares. At 23 million shares, the Qs are actually going to test May 29th today, and they're coming into it with volume. That says the Qs want to, at a minimum, get up to March the 6th. That March 6th low is going to be a price point of 63.23 cents. So it's going to be able to get up into the swing point, which is May 29th. Again, the low there, 63.15. I'm sorry, that's the high, 63.15. Low of 62.28. You're at 62.26 right now. You're coming into it with volume. So that is giving you the signal that the bounce is absolutely underway, and it's got enough juice to bounce a bit higher, or at least to go test the high out there of May 29th at 63.15. So that's going to be the first one to provide us with any kind of information as to what is going on inside the market from a bounce perspective. Let's go take a look at a couple of the sectors inside the S&P. Let's go take a look at the technology sector. This was a trade. I had 3 trades in my newsletter this morning. This was the 4th trade that I didn't take. I didn't just simply want to overwhelm everybody. And this was the reason that I was going to take this trade. Let me just erase all this stuff up here, and I'll show you why. Well, it wasn't the XLK? Let me just refresh the screen here. Yeah, I was going to say this was a hammer candle, but it doesn't look like a hammer candle out there. I know why it was. On the summation index, there we go. The summation, I'm just trying to gather my thoughts here, and we're going off the air in a moment, or at least to our next break. The summation index, the McClellan summation index, actually ticked up yesterday in the XLK. All other sectors, the other 8 sectors, no, it wasn't the XLK. It was the materials sector. I knew that this didn't look right. So we come back from break, folks. We're going to go take a look at the materials sector. Just took me a little while because I looked at so many charts last night and this morning, and we're going to go take a look at the materials sector because that's the one, I believe, that gave the signal yesterday and actually ticked up. 877-927-6648. You got the Dow up 168 points. S&P's up 19. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. 877-927-6648. Absolutely stay tuned because we're going up to Newton, Mass. to Basil Chapman. And again, folks, you have time to catch Basil's online Master Trader course. It is this coming Friday. It's going to be an absolute great education. All the details on the homepage of TFNN.com. So as I was cruising through the markets last night, early this morning, taking a look at what the sectors were doing, expecting to bounce. I've been writing about a bounce coming, talking about a bounce coming, just simply the way that, it's just a normal part of any market out there. And what I did when I was taking a look at the charts yesterday, I take a look at all the sectors inside the S&P 500. The only sector that actually ticked up on the summation index, that is a short-term indicator, but it's a very, 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 did I say very? It's a very valuable indicator out there. The materials sector actually ticked up. Every other sector was either down or a little bit sideways. So that led me to where I wanted to spend time. What was going on inside the materials sector? Well, not only did it tick up, but, this was a beautiful thing. It created one of my favorite candle patterns. That was the hammer candle, and it did that on June 4th. And so you had a hammer candle, and then yesterday, what I love to see after that, you had a bullish engulfing candle. So you engulfed two candles after a hammer. You got confirmation. I was like, this is a beautiful thing. So the choice was to go ahead and play the XLB. Now, the XLB, the material sector, only a little bit 3% and change inside the S&P 500, so it's not going to have any type of a great momentum. It's just too small of a percentage. However, what I did was I dug down into the material sector. You can do this too in any of the sectors. Just go to the Spiders, SPDR. Just put that in on your search page, and you can go to their website and you can take a look at the weightings inside there. That's what I did. I just looked at the top 10 weightings, and what I found was the stock that looked the strongest to me. That's the stock probably that Dave was talking about when he called earlier. That stock is up 3.8%. This morning. If we take a look at the XLB itself, I don't know what I just did there. How about that? I just wiped everything out. That was not a beautiful thing. But the XLB up 2%, 1.9%. So what I did was I just simply went out there. Well, that's a shame. I just simply went out there and I found the strength inside that versus load the default. Versus going ahead and playing the entire sector. And so you can do that as well, or you can always check out my newsletter service. You can try that out for free, 30 days, unconditional money-back guarantee. Go to the homepage of TFNN.com, click underneath my name, and that'll take you to Mastering Probability. And as well, as long as you're over on the homepage of TFNN.com, treat yourself. Make sure you'll go get my special report that I did, Successes in the Numbers. It is a long-term strategy for being able to manage your retirement funds out there. And if not for you, folks, do this for your children. Because in short order, investing in their retirement, when you think about what's going on in the world, I don't really talk politics and religion and all that type of stuff here. Not that I don't have opinions about those. I just save that for some other point in time. But what I am interested in doing is I want us to be able to help our children to absolutely have a better life. And they can. And it's not painful, push them out of the house or leave them in the house and take that money that they should be paying for rent and put that into a IRA, some type of retirement vehicle, and then go get that strategy. It is an absolute strategy. It's an indicator, and it makes it easy. Anybody can use it. Anybody can follow along. Do yourself a favor. Do your kids, your grandkids a favor, and they can have a financial fortune so that they can do anything that they want in life, just like you can, folks. Never, ever, and I mean never, ever give up, folks. It has been a real pleasure to be with you here for the last 2 hours. Stay tuned for Basil Chapman, then Larry Pesavento, the David White Band as the warm-up show for the Tom O'Brien Show. Have a great day, folks. I look forward to seeing you in the morning. Take care. Bye-bye now.